Welcome back. You're watching us here on Chartbusters. Now for the management that everyone is awaiting, that is IndiaMART, because the stock is trading 15% lower after what can be called as a disappointing set of second quarter numbers. The collection growth dipped sharply to 5%. The expectation was double-digit growth earlier, and that was what the management's target was as well. Paid subscriber growth too did not bounce back. So to discuss this and more importantly the way forward, we have Dinesh Agarwal, who's the CEO at IndiaMART, joining in. Thanks a lot, Mr. Agarwal, for joining in. Always a pleasure speaking with you. We talk about quarterly numbers after every quarter. This time around, the street is disappointed because basis what you said the last time to what has been delivered this time around, there has been a bit of a gap. Paid subscriber growth, that's taking time to come back. And when do you get back to this net subscriber additions of 5,000 to 8,000 per quarter? The street really wants to know that.
Yeah, I wish I could have a very good answer to that. We are trying to control the churn in the early silver customer base. As we said, while there is the top 50% customers account for about 75% of the revenue, and that piece continues to grow well. We are having continuous challenges on the new set of customers who are coming in the silver monthly and silver annual. And that is what we are trying to fix. It is taking much longer than what we anticipated.
All right. So for the first half of the year, Dinesh ji, you have done close to around 4,000 in terms of an addition. For the second half of the year, what could that number approximately be? Can you do close to 8,000 to 10,000 for the second half of the year?
I won't be able to commit any number as of now.
But it will be better than the first half at least.
Should be, because the fourth quarter is generally better, yeah.
All right. So give us a broad range though. Can you do, as things stand as of now, could it be in that vicinity of around 6,000 to around 8,000? Visibility as of now, maybe 8,000 to 10,000 is a stretch. But 6,000 to 8,000 is...
about that maybe in the after the next quarter. If we get some grip, then we will be able to give you some numbers.
Okay, all right. So let's keep that aside then in terms of subscription addition. But what about collections? That went up only by around 5% on a year-on-year basis. And the street was very, very disappointed about that. There were some execution issues. So explain that to us. And you're talking about collection growth returning to double digits. Will it return to double digits for the second half of the year or in an average for the full year?
So on the collection side, we definitely got caught on a bad foot this particular quarter. If you really see, our collections have been growing well over double digits in the past. And we have been warning that it may not be closer to that 15-20% because the net customer growth has been muted for many quarters now. Now, should it be resulting into 5% growth? I don't expect that. But since we have not been able to deliver, let me come back and do some changes and deliver, and then only we can commit any number.
So, what would those...
I still say that we should expect a double-digit growth.
Double-digit for the full year or for the next couple of quarters?
Next couple of quarters, I think full year, whatever is gone past is gone past.
Okay, because, there are brokerages which are expecting, the next couple of quarters also to not see double digit. In fact, they expect this to prolong a little bit. So just wanted your thoughts on that one. And also, just before we talk about this itself, the margins, they've seen improvement over the last 3 quarters. But part of that could be you addressing the churn in the near term and prioritizing that over the other investments that you would have. So what's your sense on how margins pan out from here on?
No, I think if you really see the cash flow from operation vis-a-vis collections, the margins have not really grown. What happens is because of the deferred revenue, as I've been explaining this to the street again and again, our collections go into the deferred revenue and deferred revenue flows into the revenue because of the longer period subscription. So what is happening currently, if you see the revenue from operation is showing 18% growth, whereas the collection is only showing 5-6% growth. So correspondingly, the cost is not commensurate to the revenue. The second part is since our net customer addition is slower, we are also not pressing paddle on the gross customer addition because until we fix the churn, there is no point trying to bump up the gross customer addition for 1 or 2 quarters. So that is also giving us some leeway on the cost of customer acquisition, which is upfront heavy and then gets amortized over time. And that is why you are seeing the elevated margins, as we have been guiding that margins in the long run should be at around 33%.
All right, 33% in the long term for the margins.
This is the standalone margin, right? X of the inorganic.
Yes, yes.
Got it. Since I just touched upon inorganic, I wanted to ask you about, I think what you've done around, if I'm not mistaken, 6 to 8 acquisitions of the recent past, the last few years. And one of those acquisitions is Busy Infotech. I think when you acquired it, it was doing revenues of 13 to 15 crores. Currently, as well as it's in that vicinity. So what is the plan with regard to this inorganic growth that you have done, Dinesh? Because the core business is struggling a little bit. It's taking time to recover. So what is the plan with this? If you want to give us a number on Busy Infotech, on a quarterly basis, where do you see the revenue run rate go up? And some of these acquisitions, if they're not working out, will you look to sell them or do you want to grow them?
Mm-hmm. So we have done 2 acquisitions and we have done about 10 minority investments. Yes. Out of the 2 acquisitions, one is a very early stage live keeping, which is Talion Mobile. So that has started to sell only recently. Now coming to the Busy, which was the large acquisition that we did, when we acquired the company, it was about 40 odd crores annual company, 42 odd. Now at current run rate, it is about 70 odd crores. So we expect that this particular year from the acquisition 3 years ago, it will become double in these 3 years. So we are reasonably happy that nothing has gone wrong, as well as it is growing, albeit slowly, but I think we are happy with the acquisition.
All right. So 80 crores is what you will do this year, is what you're saying. 3 years ago when you acquired was close to 40.
Crores or 80 crores.
Yeah, got it.
Is about 68, 70 crores.
But when you acquired it, you were talking about it having a big runway. So if you have to guide us for the next 2 years, what do you see this number go with regard to this acquisition? And also all the others, since business is struggling a little bit, do you want to raise some cash, and sell some stakes, minority stakes in any of these companies?
No, I think cash is, we already have 2,500 crores of cash on our balance sheet. So there is no, in terms of profitability, we are still generating more than 100 crores of cash per quarter.
Right.
And fourth quarter is about 200 crores. So effectively, we are generating in excess of 500 crores of cash. So there is no difficulty on that side of the business or survival of the business or anything like that. We are very happy with the performance in terms of the bottom line. The only thing is the growth that we are trying to address. And for Busy, I think we will continue to have the similar growth of upwards of 20-25% in the coming year as well.
Just a quick answer before we let you go, sir. You have refrained from giving us any specific numbers, but could you give us a sense of by when do you expect this churn to settle? You have started this process of reducing that. By when do you expect? Could you give us a timeline in the next 1 quarter, 2 quarters, 3 quarters?
I mean, I've been deferring it with 1 or 2 quarter every time. So I have no face to say that I will be able to fix it in 1 or 2 quarters. But let me see.
All right.
All right. We wish you well, Dinesh ji. Sometimes businesses get a little bit tough. You have generated a lot of wealth for shareholders. But in today's trading session, the stock is down because the street is clearly disappointed with regard to these numbers. But we hope for a recovery. And when that happens, we re-invite you here on CNBC TV. Thanks a lot for joining us.
Just one thing that while business is tough, what you have to give is to his honesty. He said that he has been guiding. He has been unable to go ahead and achieve that guidance. So at this point in time, he does not want to give any guidance. He has no face to show because of missing the earlier guidances. So that sort of honesty is something that will perhaps go along.
And hopefully numbers follow post that. Well.